the global investment paradigm shift that appears to be taking place recently, where there is some lower demand for US Treasury assets and some movement away from US stock investing and US currency investing to overseas markets. One of the things on individuals' minds is what actions should they consider taking? And while this is not individual financial advice, you should consult your own wealth manager. Here's some things you might want to think about. One, are all of your money market funds backed by the US government? If they are, you might want to think about diversifying into A-rated prime money market funds instead. Two, do you exclusively spend your money in the United States? If so, you may not have a compelling reason to hedge US dollar currency. However, you might want to think about how much of your investment portfolio is US based stocks and bonds, and consider very carefully whether you should increase or add an allocation to international stocks and bonds to your portfolio. Keep in mind that this diversification to international stocks and bonds can enhance returns, but it might also increase the fluctuation in value of your total portfolio. In particular, international stocks historically have been more volatile. What that means is your account value can move up and down more than with US stocks. That's not always the case, but it's sometimes the case. Last year in 2025, international stocks performed quite well, and there's some possibility, although no guarantee, they could continue to perform well in the next few years as this slow migration happens away from US-based assets. Third, hard assets. What I've spoken about so far has been liquid financial instruments, meaning money market funds, individual stocks, stock funds, individual bonds, or bond funds. Do you own hard assets such as real estate, a single family home, an apartment building, farmland, or do you own gold? Do you own silver? I'm not suggesting you run out and purchase these, but what's on your balance sheet and how quickly those assets can be converted into cash may or may not be important as you think about diversification. So don't only think about diversifying the types of investments you have, but think about how liquid those investments are and where you're spending your money and how quickly you can convert your investments into cash that you can spend in the country that you spend time in and that you intend to spend time in the future. I'm Peter Newman with Peak Wealth Planning. If you like this content, please subscribe below. Keep in mind, this is not individual investment advice. You should consult your own financial advisor. Thank you.